Apple proved again today that its business model and its products just resilient in these markets. What is going on, investors? Hopefully, guys are doing well out there. We're going to talk about Apple's Q4 earnings, which came out after the bell. Yes, these are Q4. This is a fiscal quarter for Apple. They run on kind of a funky fiscal quarter system. The calendar Q4 is their Q1 results. We'll get to those, obviously, in a couple of months. We'll talk about Q4 today. We'll get into the revenue estimates for the upcoming quarters and see if this company can actually meet these expectations. That certainly hasn't happened with Meta and Amazon, which we reported on earlier. We'll come over here and look at the financials. They're just spectacular across the board. We'll talk about the buyback, the profits, the cash flows, everything you need to know with your Apple investment. We'll come over here and look at the technical perspective. This one's not really doing anything in the after hours. It was down about 3% during the regular trade, up about 0.5% in the after hours, hanging out in a zone where I actually think if you want to accumulate this stock, it's potential that we're making some higher lows here. I don't think it's going to be this steep recovery on this one. We're going to snap back to the all-time highs back up to 180, 190 on this one, but we're slowly inching our way back up there. Now, look, over the last year, this stock's actually performed relatively nicely. So if you had this as a core position in your portfolio, it's at least held up better than most stocks out there, down just 2.7% over the last year. Now, that's on the heels of those Q4 earnings, which came in today. Revenue coming in at $90.15 billion. That was still 8% growth year over year, and it beat expectations by actually quite a bit. Over $1.38 billion. They beat on that earnings side as well. I'll talk to you that EPS side over at Apple is impacted by their buyback, which as they're buying back the shares, obviously they earn more on the shares that are still withstanding. Now, Wall Street was expecting in this quarter 88.77, the high-end estimate. What I always like to do when Apple beats or any company beats, I like to go look who is the most bullish analyst for Apple, and they were expecting 92.8. So this number at 90.15, still a little bit underneath that bullish estimate, but the low end was close to $85 billion. So nice solid beat on that revenue side. When we come over here and look at these financials, you're going to see it's across the board. It's not only across the board kind of in these geographical regions, but I was shocked at the Macintosh performance. We'll talk more about that here in a second. PC fanboys, you might want to go away for that segment. Now, for the all-important Q1, which again is calendar Q4, but for Apple's fiscal quarter system, it's a little funky. I wish all companies just went on the calendar system. This one doesn't. Microsoft doesn't. Many others that we follow don't. But Q1, which again is Q4, your revenue estimate is for a whopping $128.29 billion. That would represent about 3.5% growth. Now, Apple does not provide guidance. They don't even really give us a hint of anything to happen. But I think what Wall Street is doing is, look, they look at this most recent quarter and they say, hey, they hit it out of the park in this quarter, so the next quarter we're not too concerned about. I think the fact that the stock is barely moving in the after hours, in fact, now I'm seeing it's ticking up about 1.5% in the after hours. Well, I think people are presuming that this $128 billion, now the high-end Wall Street analyst is at 135, the low end is at 122, so somewhere in that range, certainly in the 125 to 130 range, certainly would be good enough for most people at Apple. Now, in terms of EPS, you're expecting a wildly profitable quarter, at least from an earnings per share basis, at $2.13 per share. That would be growth of just 1.63%. I'll show you they are growing their revenues, but the earnings are not really catching up with that. Now, let's come over here and look. Last year, you had $83.36 billion worth of revenue. It ticked all the way up to 90.1. That all-important services revenue, looks like that's slowing down a little bit. Go kind of those law of larger numbers when this was a smaller business unit from a dollar perspective. Obviously, those incremental jumps look a little bit better from a revenue perspective. You had $18.3 billion worth of revenue there last year. This year, you're closer to $19.2 billion. On that product side, this is your iPhones, your Macs, and all that stuff. That went from 65 up to close to $71 billion. That gave you that total of $90 billion. Now, the reason why they break this out is those gross margins on the services. This is why we want those services services margins just to continue to go up, because look at this. Off of $19.2 billion worth of services revenue, you paid just $5.6 billion worth of costs. And look how they barely moved year over year. Last year, you paid $5.4 billion worth of cost on those services, and that it barely moved to 5.7. And you added on, looks like about $900 million worth of revenue to that top side. So that's why you want to see those services continue to go up. They announced, I think yesterday or the day before, $1 or $2 increases on music and TV. So that should help drive the services revenues a little bit higher in subsequent quarters as you see those price changes start to take effect on those renewal basis. On the product side, off that $71 billion worth of revenue off those iPhones and iPads, well, you had about $46.4 billion worth of cost. Your total cost of sales coming in at $52 billion. So off $90 billion worth of revenue, you had about $52 billion in costs that give you gross margin of $38 billion. Now you got the other operating expenses over at this company. R&D, I've been noticing this has been ticking up by a healthy $1 billion every quarter. They're spending some money over at Apple. I think we're on the verge of some kind of new product. I don't necessarily think this year, but probably towards the back half of next year, I would guess that Apple has some kind of new product. I don't know if it's AR, VR glasses. I don't know if it's the car. I've heard rumors about both, and I would expect one or the other to come relatively soon. You've got selling, general, administrative costs. Those ticked up as well from 5.6 up to 6.4, although they've kept those really nicely in check. Your total operating expenses coming in at $13.2 billion. Last year, you're at 11.4. So you take your $90 billion in sales, you minus off your cost of sales of $52 billion, you minus off $13 billion worth of operating expenses, and you get your operating income. This is the income you generate from just running Apple's business, coming in right at $24.9 billion. Last year, you were at $23.8 billion. So just a small tick up. Again, those revenues ticked up by 8%, but not a ton of it flowed down here to that operating income side, about $1.1 billion to be exact. Now, you have to pay some taxes and all those other things. You come down here to net income, and you see that barely moved. You went from $20.5 or $20.6 billion of net income last year to 20.7, so essentially a rounding error. But notice that your earnings per share actually kind of meaningfully increased, went from $1.24 to $1.29. Again, your net income barely moved, but your earnings per share went up 5 cents. Why is that? Is because you are buying back the stock at a rate unseen in these stock markets. And you notice that the shares outstanding last year was at 16.63, this year down to 16.12. So as they buy back the stock, it creates more earnings per share kind of artificially. This is why we don't tend to focus on EPS. I don't worry too much about EPS. I tend to focus on operating income right here. And the company added about $8 billion worth of income, actually a number closer to like 6.8 or so, and about $1 billion, in fact, a little more than $1 billion of it flowed down to this operating income side. Now, down to the geographical regions that this company operates in. Americas went from $37 billion or so up to closer to about $40 billion. Europe up from 20.8 to 22.8. So they're going to have trouble paying for their electricity bills there, but they're certainly buying that new iPhone 14. You got Greater China. I was actually surprised to see these numbers tick up. You went from 14.5 up to 15.5. So solid growth out of China. Japan, you are seeing a slowdown there. You went from $6 billion in revenue down to 5.7. That was the only region where you saw declines. And Asia Pacific went from about 5.2, really strong gains there, up to $6.4 billion. Now, here's the big surprise. You had iPhone. This is not necessarily a big surprise. You went from 38 up to 42 on that iPhone. Some of that I think has to do with the release schedule. I believe that you got the new iPhone that just came out. A little more of the sales occurred in this most recent period, so some of that offset that. Here was the surprise for me. Macintosh from $9.2 billion all the way up to 11.5. So we did Microsoft's earnings videos just a day ago. We've been seeing with AMD and NVIDIA. and probably Intel's report today, there's some PC softness, okay, those personal computers. And there is softness in large part because a lot of people upgraded their systems. But the other reason is Apple is absolutely kicking their rear ends. And I remember doing videos a year or two ago on Apple talking about their M1 chip, and now they're on the M2 chip. And the PC fanboys would get in my comments and saying, no, it's not that good of a chip. It's not going to do anything to PC demand. Well, you're seeing it right here. They're absolutely kicking PC's ass. They are still gaining revenue and gaining market share in Macintosh computers to the tune of over $2.5 billion worth of more revenue year over year. It is because that is a better product. And yes, AMD, Intel, Nvidia, they're all starting to catch up. But where is Apple going to be another year from now, 2 years from now? Probably still ahead of the competition, particularly when it comes to laptops. Sure, you guys that have liquid nitrogen cooling down your GPUs, sure, Apple's not going to compete in that market, but that is a niche market. We're talking about productivity computers and laptops. Apple is absolutely kicking butt. Now, iPad, the other reason why it's supporting that is iPad, you notice that actually went down from 18.3 to 7.1. That's what I actually expected for Mac as well, at least to kind of flatline, maybe go down a little bit. No, it's showing you that their products on that Macintosh computer side, it is strong. The consumers are buying it, but I'm also seeing a lot of evidence that businesses are buying them as well. It's making inroads to where PC had dominance. Now, wearables, home, and accessories, those ticked up from about 8.8 up to 9.6. And again, your services went from 18.3 up to 19.2. There was your $90.15 billion worth of revenue for the company. Now, as you know, with Apple, they've got a boatload of cash. That cash is still there. They've got another. What's interesting about Apple, and I don't think any other company does that, they have their cash and their marketable securities as well. You could probably throw in accounts receivable since nobody would want to stiff Apple with any kind of bill. And you've got a mountain of cash here. I guess that's like $80 billion. But then you have these marketable securities down here. These are non-current assets. These marketable securities, this is also cash. And that is sitting at about $120 billion. So needless to say, this company is very financially secure. What's always interesting about Apple is their inventory number is almost minuscule, just $4.9 billion worth of inventory. Last year, they were sitting on $6.6 billion. For a company with $70 billion worth of product sales to have just $4.9 billion in kind of finished inventory seems incredibly well managed. Tim Cook's background, I believe, is in supply chain. You can tell that he has his hand on that. Term debt ticked up. This is your current term debt from 9.6 to 11.1. Some of that rolled over from your non-current, kind of longer term debt. That went down from 109 down to 98. When we roll down here to cash flows, we get a 12-month view of cash flows. You pull down just $99 billion worth of net income. Isn't that a nice number to pull down onto your net income side? I bet you're going to have positive cash flows when you pull down $99 billion. Get to add back in depreciation, stock-based compensation of just $9 billion. Hello, Square. Hello, Twitter before you went private. Hello, Teladoc. Hello, a lot of Kathy Woodstocks. You know, look at the ratio of net income versus stock-based compensation. Could even throw Amazon in here as well. Roll down through these add backs and subtractions, and your cash generated running Apple over the last 12 months, just $122 billion. Last year, they made $104 billion. I'm laughing because it's hard to say a number that large with a straight face. This is just spectacular. This is why the stock, despite all the financial turmoil most stocks are in, is down just 2.7%. And if you factor in an after-hour gain, the stock is basically flat year over year because you have just unbelievable net income, unbelievable cash flows, and not a lot to spend it on. They did do a little bit on the investing side, but not a whole lot. You come down here to financing. This is where you get a lot of action for Apple. You had the purchases or the repurchases of the common stock to the tune of $89 billion of a share buyback for Apple over the last 12 months. Last year, they bought back about $86 billion. What you might be wondering was what was the pace over the last quarter, because this was just a 12-month view. What I do is I pull up. So this is Q3 for Apple. So what I did is I noticed notice their repurchases. So would be through 9 months. This is how you can compare these documents. You get a 12-month view, but you're like, well, what was it just over the last quarter? So you pull up the 9 months and you see through 9 months, they purchased about $65 billion worth of stock. So they accelerated that to 89. So they bought back, what's that, $25 billion worth of stock just over the last 3 months. That is one of the reasons why, and maybe a primary reason why this stock has held up very nicely, is because anytime it sells off, well, Apple is sitting there at about $20 billion, over $22 billion per quarter, actually buying back the stock. And they accelerated that over the last 3 months to about a $25 billion pace. Just tremendous support for you, the shareholder. So they issued some shorter term debt or some term debt. What these companies do is they tend to refinance debt when it becomes something that they can do or something that the bank maybe offers them to do. In this case, it looks like they repaid more debt than they took on. They repaid about $9.5 billion worth of debt after taking on about $5.5 billion. Overall, with the company, the decrease in cash over the last 12 months was about $11 billion. Again, the vast majority of that going to share buybacks and a little bit of debt. And then you also had another, we'll just throw this in here, another $14.8 billion worth of dividends. All things being considered, over $100 billion of buybacks and dividends for you, the shareholder. Again, this is off of $122 billion worth of cash flow operating the business. Apple takes over $100 billion of that and then rewards you, the shareholder, by either buying back the shares, which again, increases EPS, decreases the float of the shares outstanding, and obviously the dividend goes directly to your pocket that you can either reinvest into Apple or take as cash and do with it what you like. That is about as shareholder friendly as it gets in the stock market. Certainly there's other stocks out there that do it as well, but this is a stock that I would still consider not a hyper growth stock, but you've got a stock that is growing and they're spending the vast majority of their operating cash flows on dividends and buybacks. Again, this is why the stock is holding up relatively nicely, although it is still making a pretty clear lower set of highs. We've been making lower set of lows, but what I've determined more recently that could potentially be a turning point for Apple. And if Apple starts turning the corner, I think the rest of the market will start. And again, I don't anticipate some rapid just boom, just rocket up like we saw in March of 2020. It's going to be a slow grind back to the top, but we are seeing Meta take a dump at the bottom. We've seen Nvidia do it. We saw Amazon do it in the after hours today. I think this is maybe the final washout that you kind of needed in these markets. I don't think Apple is going to have that washout moment, particularly because of the strong cash flows, the strong business model, and the fact that they're just going to sit there and buy back the stock if it happens to go down. It's potentially possible that the lows are in with Apple, that you made some lows here back in June. There's a reason why I changed this line to purple, is I wanted to emphasize there's some lows back here in June. That would actually eliminate that downward channel line. And you made some lows here. You're making a higher set of lows back here in October. We're hanging out now here at 145. What you'd like for this one is to maybe rally up here to 150 at some point. Go ahead and give it back. Not a big deal. Give it back, come back, but keep making higher sets of lows all along the way to form what is going to be maybe the new uptrend in Apple. And then eventually, and I don't necessarily think this is going to come until calendar year 2023, you eventually push out above the highs that we made earlier this year, kind of in that 175 to 180 mark. Eventually you make a push higher there and you start kind of this upper channel. If you were to ask me the likely scenario with Apple, I think this is the likely scenario. Could it come back in Q4 and iPhone 14s don't sell well and all of a sudden the entire stock market kind of sells off and you get this big kind of a red candle dump with Apple? That's potentially possible. But again, the company would be sitting right there with hundreds of billions of dollars to buy back the stock as it continues to go down and down. I like Apple. With Amazon dropping as much as it is in the after hours, it is my number one holding. It tends to flip-flop with Amazon. I haven't added to either stock in a little while, but Apple's one that will probably throw a little bit of money at. over the next couple of months and the quarters as it has some pullbacks. And if this technical pattern that I've identified kind of with these purple lines, if this starts setting up, I'll probably be even more confident of buying this. And then like I talked about, we've had many other stocks like Meta and Nvidia and then even Amazon in the after hours kind of have these kind of washout kind of capitulation type moments. And that lines up with what we've seen with the more speculative stocks like the Palantirs, the PayPals, the Teladoc Health, the Cathie Wood stocks. Those have all completely washed out. And I actually think the market has finally cleansed itself. The Fed will eventually take a pause. I don't necessarily think we're going to pivot before a pause, but the minute they pause, that is when the market will be in major rally mode. I think you want to accumulate before that, and that's what we're going to be doing for the rest of the year here on the channel. It's not the safest strategy if you are risk averse or you're scared like a little baby to lose a couple of dollars investing money. Well, you wait till Jerome Powell tells you to buy stocks, but by then, most of them will have already rallied 30 or 40%. Hopefully, you guys enjoyed today's video. Look forward to seeing you tomorrow on the Fang Stock Recap Show. That one should be interesting, particularly the segments with Meta and Amazon. Have a great day out there. Good luck with your investments.